Mind, our Eagle company, basically sent me this thing because they're merging. So this video is going to be super probably relaxing, I think, because we're actually going to go through some like physical investing material. I don't really get too many of these. So yeah, this should be pretty relaxing. I'm pretty excited to make this video. I do love to get away from the computer and like, open up a book or just some material like this. I'll try to get my hand on some more of this stuff in the future, but I think most companies don't send it out because it's just so much paper, but I guess they legally had to with this. So that is exciting though. Their meeting's on the 26th, whether they should merge or not, but I think they already made that choice. I don't know what decision like we have the shareholders know about it, but anyway. Also, I'm sorry, I don't know how to pronounce Agnico. Agnico, that's how I'm gonna pronounce it. But yeah, without further ado, let's get into it. I'm probably just, again, this is my first time looking at this, so I'm mostly just gonna kind of read it. So hopefully you guys enjoy like me reading. But so Agnico shareholders, the board. I am gonna skip some stuff too, but this is very lengthy. It doesn't say how many pages, but there is a lot. Probably about 300 or 400. Basically a novel. So there's this nice. Oh, there's a virtual meeting. I probably should attend that. Blah blah blah. I did the low risk profile. The merger will establish new Agnico as a high quality senior gold producer with the lowest all-in sustaining cost, highest EBITDA margin, and lowest risk portfolio of operating mines among its senior peers. Okay. So yeah, this is gonna be, I think, like a 20 or to $25 billion company. So pretty big gold miner now. Upon completion of the merger, Agnico expect to have $2.3 billion of available liquidity, significant mineral reserves. I think did we look at these already in one of the videos? I'm not sure, but $2.3 billion available liquidity, significant. Okay, the merger will create best-in-class world combined, world-leading regions. Yeah. The merger of Agnico and Kirkland combines each company's strengths by bringing together two industry leaders and growing per share value key metrics such as production. Yep. With a total of $1.6 billion returned through dividends. Yeah. Details of the transaction to which will proceed. Okay, yeah, just kind of forewarning stuff. Yours truly, Sean Boyd. He is the CEO of Dear Kirkland Shareholders on the transaction. Let's see, so yeah, this is basically we're gonna get Kirkland shares. Gonna equal 0.7, yeah. So I'm gonna probably get like some fractional shares or something, which I don't like. So, I don't know, but it just is what it is. The merger of equals represents a unique opportunity to combine two companies with leading track records. Yeah, let's see. I mean, they keep saying this will have the industry's lowest all-in sustainable cost, high EBITDA margins, most favorable risk portfolio. I do love their portfolio of like where the mines are located. Let's see, Agnico will create the third world. Yeah, I think that'll gonna be the third largest gold producer, right behind Newmont and Barrick. Yeah, 26 billion implied market cap. It's the merger will establish best-in-class gold mine company. Ontario, Quebec. I think most of their stuff is gonna be in Canada. Oh, like they got something in Finland. And Victoria, Australia, northern New Mexico. Let's see. Yeah, I forgot what I was gonna say about that. But yeah, I guess that's just where I should probably zoom in a little bit. I'm sorry. Let me zoom in. I mean, not really gonna be able to read this anyway, but I'll see what I can do. I'm gonna be looking down here, but that looks a little bit better. Among the lowest greenhouse gas emitters. Okay. Let's see what they got on the next page. unanimously concluded that the transaction is in the best interest of Kirkland, and it recommends that you vote for the. I mean, yeah, it's kind of in big bold. They spent all this money trying to merge this, so that's kind of nice. Your vote is important regardless of any number of shares you earn. Alright, you own, not earn. So notice the special meeting. Yeah, we could probably skip some of this. Yep, just saying you should probably vote for it, because I highly doubt this would not pass, you know. The voting process, I don't really care too much, to be honest. I do want to see the fundamentals and stuff of the company. Like combined, I know they're going to show that. Let's see, joint management, summary of Kirkland, arrangement, merger agreement, security law matters, information about each meeting. Okay, so introduction. Let's see, I'm only going to try to read what's important. No person is authorized to give any information or make any representation in connection with the arrangement. If given or made any such information or representation must be relied on having. This seems important, but if the document is important, requires immediate attention. If any questions? Yeah, I guess just a reminder, I might as well say that just now. Like, I'm not saying you should vote yes or no. If you are a shareholder, I'm just reading this for pure relaxation purposes and so I can get informed about the matter. The securities. So important information about U.S. shareholders. The securities to be issued pursuant to the arrangement have not been approved or disapproved by the SEC. Interesting. And this data depends on the adequacy, accuracy of the circulation of fairness and merits in the planning of arrangement and representation. To the contrary is a criminal offense. Okay. The offer and the sale considering shares of security holders. Okay. Let's continue. We could probably skip this. Non-resident in Canada. The enforcement. They got foreign taxes. You should be aware. Yeah, such certain shareholders should consult their own tax advisors. Yeah. But no, here they're just going because of all unsustainable costs. I actually am curious exactly what this is. So, the World Gold Council is a non-regulatory market developed organization. Okay. So work closely with member companies. Adoption of all unstable metric is voluntary. Yep. However, I believe it's a good measure. Yep, that's why they use it. But what is it? All unsustainable costs per ounce is used to show the full cost of gold production from current operations. Agnico calculates all unsustainable costs per ounce of gold produced on a byproduct basis as the aggregate of total cash cost per ounce on a byproduct basis. Sustain main capital expenditures, general administrative expenses, including stock and option expense. So Kirkland calculates it. Agnico and Kirkland's methodology for calculating all unsustainable cost per ounce may differ methodology from other companies. Alright. I'm gonna grab this thing so I can also keep track of where I'm reading. It might also help you guys too. Exchange rates, forward-looking statements. There's some stuff about COVID, so Agnico shares questions and answers. What is the proposed transaction? Enter the merger agreement. Merger equals. Yeah. What are the reasons for the proposed transaction? And making the respective recommendations. They reviewed a number of factors. Creating a world leader, senior producer, enhances position as one of the most profitable, prolific, and prospective gold regions in the world. The combined company is expected to be Canada's leading gold producer with anticipated production in the country. So 2.5 million ounces of gold in 2021 just in Canada, or 75% of 3.4 million ounces of total expected gold production. So, one of the things, they're monopolizing Canada, but they will have like the most gold produced or mined in Canada as one single company, which could be a very good thing. But yeah, no, that'd be, they already went over that stuff. Unique synergies that drive value creation. Approximately. So the combined company is expected to generate over about $1 billion and $2 billion of pre-tax synergies. So together, they're not going to be paying as much money now that they're one company. Approximately $145 million over 5 years and $320 million over 10 years in corporate synergies. Approximately $130 million per year. Wait, this is how much they are saving of that money. While substantially unqualified, the arrangement also offers significant potential for more efficient sharing of established competencies developed individually by Kirkland and Agnico. Maintain a strong leadership team with proven track record. Oh, I'm sorry, it wasn't on the screen. Unparalleled track record in growing mineral reserves and mineral resources. The arrangement will combine the only two companies among senior gold peers to have grown mineral reserves and production per share over the last 10 years. Okay. There's some more stuff. Comprehensive arms stakeholder analysis. Let's see. Let's go to the next page. Let's see. No. None of these look too appealing. Just trying to find some good questions. How do I attend the meeting? Why am I being asked this? Is there any risk? This might be a good one to read. Zoom out a little bit. Are there any risks I should consider in connection with the arrangement? Yes, there are a number of risk factors relating to this. Now they have a whole section about it that they're basically pointing us to. So yeah, what happens if the resolution is not completed? Highly doubt it wouldn't, but there's a question there that we can refer back to if needed. Okay. This is just about the voting. Here's Kirkland. It's probably going to be like the same things, to be honest. I think we can just skip it. It pretty much is going to be the same questions. Yep, literally the same thing. Maybe a little bit different order, but yeah. Here's about the fairness and stuff. I mean, no, this is probably important, but here's your actual merger agreement. Risk factors, here's one. It's still pointing us to risk factors section. Background of the arrangement. This goes back to June 4th, 2019. The president and CEO of Kirkland and Sean Boyd, the CEO of Agnico, met informally to discuss the potential of a merger of equals. Confidently and standstill agreement with a 2-year term to enable the provision of non-public information to facilitate further discussions. So they were talking about this for kind of some time. This just goes the timeline of, I guess, yeah, why, so. This would actually be kind of interesting to read, to see exactly, how it came about. But it's like its own story, and I really do want to see some numbers and stuff. Okay. Unique synergies to drive significant value creation. The combination of Agnico and Kirkland creates a unique opportunity to unlock significant operational, developmental, and strategic synergies. Now we just talked about this actually. So let's just keep skipping until we see something that we really want to dive into. Because reading all of this would be crazy. Return of share. Talking about what happens if it gets disapproved. The merger agreement. Let's keep skipping some stuff. Let's see. Security law matters. Interest in the arrangement of shares. Interest to benefit the company. We can probably skip this section. Australia law. Yeah, this. It's not that it's irrelevant. Just don't want to get to other stuff. Dissenting shareholder rights. Okay. What is this director? Pro forma capitalization. The following table sets out the consolidated cash and cash equivalents and the consolidated capitalization of the combined company. Okay, as of June 30th. Combining company. Okay, this is actually a good table. Market cap of June 30th, 2020 would be 18 billion. Should be a lot more though now because of the price increase. Long-term debt. That's crazy. Agnico had 1.7 billion basically debt, and Kirkland basically had like no debt because subtract that from that, and that's Kirkland's debt, basically zero. They're not gonna have too much cash on just under $1 billion. That's kind of a good table though, with just some information. Cool. Here we got another chart. Can't move it over anymore. Revenue from operations, right? This is another one. The pro forma of consolidated, whatever, Net income for the period. Looking at about 1.1 billion for the year end. For the year end 20. At December 31st, the 6-month end. Did I read this wrong? This is for June 30th. Okay. So for the 6-month end, this is what they're looking at. EPS of about 1.48, so maybe an EPS of like 3 for the year. Yeah, cool. This is unaudited though, just keep that in mind. Something else kind of down here, netting for the period operating margin. Actually, yeah. 1 divided by 5.5. What is that, like 25% or something? Maybe 23. It's fine, it's about that. Oh, 1 divided by 5 would be 20, so 1 divided by 5.5 is like probably 18%. It's 1.1 though, so maybe it's 20%. What was I looking at? Okay, let's... Oh, here. I'm not gonna be able to show you guys, but down here it just says total current assets 2.1 billion. That's actually kind of a good amount, 2.1 billion. Total assets, looking at 24. You got that long-term debt. So total current assets 2.161. So basically 2 times the amount of total current assets compared to their long-term debt. The current ratio is about 2.2 something. Anything above that's fine. Going to some risk factors here. Material contracts other than as disclosed. There are no contracts to which the combined company will be a party to following the completion of the okay. Risk factors, okay. This seems to be a big section. The completion of the arrangement is subject to waiver several. Yeah, there's a lot of stuff to unbuckle here, but yeah, this does not look like I want to get into that right now. Yep, there's a lot here. Risk factors of the combined company. Yep. I guess one thing that we could have done was take both the companies and literally combine them, like to see how much, what their balance sheet would look like, how much money they could potentially be generating. I know they show us some more stuff in the back, but I kind of want to get to that. These are the consents. Here's a bunch of definitions. A lot of definitions. Where's the appendix? Court orders. Zoom out a little bit. Let's see. Oh, they actually put this stuff in. Wow. I guess they have to, right? Alright, this is literally all legal stuff that I don't really want to read right now anyway. A lot of stuff here, jeez. I guess we gotta go to the way back. What is this? Oh, okay, wow. A lot of information here, wow. Let's see. Prior sale. What is all this? Number of securities issued. Price. No Agnico shares or other securities of Agnico have been repurchased by Agnico during the 12-month period preceding the merger agreement. No, Agnico has not sold or issued any shares of securities. Okay, during this 12 months. That's actually really smart because that could be a big problem if they were to do that. Like, yeah, that would just be kind of like not slimy, but that was definitely part of the agreement. Here's their dividend policy. cents per share. Do they say anything about expects to maintain its existing dividend policy and payments until the arrangement is complete? Future dividends will be at the discretion of the NICO board. I mean, makes sense. Let's keep going. Yeah, they mentioned Detour Lake. I want to read this because in their newest report, Kirkland mentioned it was pretty good. Or they found like 10 million more ounces potentially of something. Detour Lake. The scientific and technical information included in the below has been derived. Okay, yeah, do we need to read this? No, I don't think so. Project description, location. Are they going into each mine too? All this would be pretty good to read. Yeah, I kind of want to timestamp this property. Let's just get this on the side this way I remember. Project descriptions of Detour Lake. It has 30 leases and 10 patents totaling 10,000 something HA of service rights at Detour Lake. The 21-year mining lease is subject to annual renewal payment. Detour Lake is situated approximately 30 words. Let's go over here. Oh boy, this is getting out of my my knowledge base, but the two, they're recognized gold mining, gold materialization at Detour Lake and West deposits. Yeah, alright. I may have to get back to this. Drilling prior to 2020 expiry. Alright, there's a lot of good stuff here. But I know there's something in the back that I really want to get to, and I don't know how much time we're going to be spending on it. This is getting closer. I mean, over here they have their CapEx forecast looking to be the 347 million, the 2021 budget. Let's see. I know it's back here. It's gotta be here's the appendix. Alright. Here we go. This is it. The moment we've been waiting for. So here's the pro forma for, I don't know if that's how you pronounce it, but pro forma. Here we got the revenue from mining operations, the consolidated, all of these bad boys. About 5.6 billion in revenue. Net income for the year is going to be 1.1 billion. That's going to give an EPS diluted of 2.44. Nice. Let's see. They don't specifically say operating margin, but we can calculate it ourselves if we really wanted to. Let's see, produce. Yeah, the total income before taxes. Income and mining tax. Wow, 500 million in income and mining tax expense. Jeez. So their income before or taxes is 1.6 billion. That's interesting. Look at Ignico. This is for the year end of December 30th. They did 3.1 billion revenue. However, they only did 511 million net income. Kirkland did 2.4 billion and still did much at 787 million in revenue. Sorry, net income. So their margin is so much higher, but they did less revenue and more money than Agnico. So, wow, production, they're spending that 1.4 billion on production while Kirkland's only doing 672. Huh. Interesting. What is this? This is for the 6 months. So this was the year in 2020. This is 6 months of June 21. So yeah, only the first 2 quarters of this year, not including their newest quarter that they just released. 3.1 revenue. Then we got the net income. I mean, yeah, but it's a little bit less data, but I do like to see this stuff. I'm just taking a look at it. But yeah, 1.48 for the, EPS. You just multiply that 2, I guess, to get a quick estimate, although that's not really a good way to look at it, but it's kind of hard to compare it to the previous thing because of the year difference. Here we got their balance sheet. This is as of June 30th. So, let's see, good. 21 billion. So 21 out of 24, was it 85% of their assets is just in plant, property, and equipment. They're going to be sitting at 856 million in cash. Wait, what am I looking? I'm looking at the consolidated. Current, let's see their debt. Look at this. Like, Kirkland literally had 0 debt, so all the debt is just coming from Agnico. 1.4 billion, and they got that. 856 million in cash. They do have some lease obligations too. Not like too much finance lease obligations. I think that one too. Current portion of long-term debt, so we can probably add all these up to see how much debt they actually have. Common shares, let's see. They're gonna have 16. They're gonna have about 16 billion shares. Good to know. Where is there? There should be a cash flow somewhere. Oh, why is it all the way down here? The following table illustrates the preliminary allocation of an estimate purchase price to acquire the identified assets and liabilities assumed for June 30th. I guess we don't really need to see that. Yeah. Pro forma net income per share. I mean, we did kind of see this already. Why? I guess would it not make sense to show a cash flow statement? Increase in 7.7 billion. Yeah. I may have to redo this again here where I guess they just don't show cash flow because I guess that just wouldn't make sense. I don't know exactly why it wouldn't make sense. But I guess it just wouldn't make sense. Yeah, I might take a look at some of these other things in here. But there's just a lot, But the main thing that I really wanted to get was that thing at the end where they actually show the how much money they have together, or like what their balance sheet looks like together and stuff. And yeah, I guess the thing that we'd have to look at too is them discussing it. Where'd it go? Like this conversation, 90 million reflect no increased production. This might be when it increased in production of 85 million as a result of fair value increments related to inventory identified with estimated purchase price allocation. The total fair value of purchase price and net assets to be acquired will ultimately be determined as of the closing date of the acquisition. It seems like what I want to see is on this page before. Maybe not. Alright, if you guys like this though, let me know because we can, dive a little bit further into this book, but I can probably try to get my hands on some other companies' presentation. So I'll scan this. Yeah, let me know if you liked it because I think these videos would be pretty cool to do. Just I don't get a lot of these books, so if they send it, we can definitely make a video, but that's if they send it. I can probably request it though, so yeah, let me know if you guys liked it. Let me know what you think of the report or the merger. I think it's probably a good thing. I don't know too much, but I guess it would just mean less competition. Which I guess, yeah, I think it'd probably be a good thing. But yeah, I definitely gotta check out the Agnico mines more because I don't really know anything about it. I mean, even Kirkland, I know very little, but I at least know Mikasa, Fosterville, and the Detour Lake. They might have one other one, but I think those are the three big. Actually, I think those are the only mines, but they're pretty profitable. So, anyway, thanks for watching, everybody. Hopefully, you enjoyed the video. Take care.